Hello and welcome to Business Today. I'm Siddharth Zarabi. On the show today, we discuss a landmark deal. Japanese lender Mitsubishi UFG Financial Group, MUFG, is investing $4.4 billion in Shriram Finance Ltd. This marks the single largest foreign direct investment in India's banking and financial services and insurance sector. And joining us now to help us understand the broader objectives and the future growth path after this mega deal is Shriram Finance's Umesh Revankar, the Executive Vice Chairman of the company. Welcome to the show, Umesh, and thank you for joining us. I want to begin by getting you to tell our viewers the strategic intent behind this move to bring in the company as a 20% shareholder. Is this primarily for growth capital for organic expansion? Is it for future inorganic plays, or just a balance sheet de-risking move to prepare for the next credit cycle?
No, basically we were looking for a growth capital, and we had choices of choosing between various type of growth capital. Either we can go through a QIP process or through a partner. We felt that at this moment where India is growing at 8% GDP and the economy is expanding, the growth opportunity is very big. And when the growth opportunity is big, if you are able to get a partner with that too, with international repute like MUFG, we prefer to have that as an option for us. And therefore, we started engaging with MUFG. And we're happy to say that it has culminated into a decision to invest, MUFG investing with us with 20% in a preferential issue.
Umesh, before I get on to some specific question with regard to the company, I also want you to reflect on a recent set of developments, which is that Japanese capital is accelerating its presence in India through various deals, several high-profile deals, including, for example, Yes Bank and other transactions. Is there a Japanese angle that we should be keeping in mind when evaluating this deal?
See, the way I'm looking at it is, I have been traveling to Japan, knowing the Japan's organization for nearly 7 to 8 years. And if you look at India and Japan's collaboration in many of the activities, manufacturing, infrastructure, there has always been a positive angle from Japan towards India, and the same is true for India to Japan. So that is always been there. So only thing is, I think they were looking at a right environment to enter into India, especially the financial services, after carefully looking into various development that's happening in India. The government is now pro-business, and even the regulator also is making it easy for the money to flow into the financial services. So overall, it is a positive sign for the businesses in India, and with the support coming from both the environment and the government regulator, I think the Japanese companies our banks are showing a lot of interest in India. And I think it is a natural, because if you look at the overall Asia development, India is the country with the largest population, growing at 8%, and they need to be part of the development story in India, and they have enough large capital. Japan has very large capital at disposal to invest beyond the Japan, and they have been looking at various Asian countries, and India being the largest economy, naturally it is coming into India.
Absolutely, and as the saying goes, the Japanese take time, but when they decide, they take very firm steps and are very, very committed long-term partners. given that background, I also want you to tell our viewers about any guardrails that the board of your company has put in place so that your core franchise remains what it is, because somebody would like to know whether over time you will reflect the priorities of your stakeholders in terms of the business approach, or will it continue to be what your company is known for?
We will continue with Shriram, our own philosophy, our culture, and the Shriram way of doing business. Why I can tell you very firmly about this is they have met us and have seen the business operation. They have met the senior colleagues and depth in the management. They are quite happy the way we have built the business. And the uniqueness in the way Shriram has built the business gives them a confidence. And also for us, we also get a confidence and comfort that the MUFG has invested in other Asian countries. And I have seen the way they have managed those investments. Indonesia, Thailand, Vietnam, and Philippines, the way they have managed. They have managed it through the local management only, without really disturbing the local culture or the way of doing business or the main focus of the business. So the main focus on which we have built, main constituency on which we built the business, that will continue to remain. However, some of the best practices of an international giant, that will be definitely taken into account, especially governance, risk management, digital play. These are all the things which I believe they have wider exposure, knowledge, and experience. Some of these will be definitely brought into India, so that we also get best of their best practices and improve our business.
Absolutely. And on that note, what would you say in response to my question that by when should shareholders take a call or judge whether this has been a value accretive deal from a perspective of understanding both the money, the capital, and the practices and value that this partner is bringing onto the table now, Umesh?
I think the understanding is very clear, and we will definitely continue to run the business the way we have been running. But the only thing is, the opportunity being better, we will be growing much faster. So the benefit will accrue through bigger growth, better bottom line, and also you can see the efficiency being built in the business, which will definitely help the shareholders to get the better, get the benefit. And I think I don't see any timeline per se, but from the very first year, we should be able to give that kind of a comfort and confidence to the shareholders that this is a very good win-win situation for all.
Absolutely. Looking at the example of other Indo-Japanese collaborations and joint ventures and investment partnerships, products from India and the Indian business has also gone overseas, automotive being just one example, Umesh, that you are fully aware of. So therefore, I want to ask you, is the focus of this partnership going forward, at least in the near future, going to be largely India focused, or do you see any cross-border opportunities for Shriram outside of India as well?
Right now, our focus will be India. I think there is enough growth opportunity in India. See, if you really look at government's roadmap for Viksit Bharat 2047, for at least next 2 decades, we have sufficient growth opportunity within India. And maybe if there are other opportunities that comes in between, we can definitely explore. But the focus will remain in India because of the great opportunity that is available.
Absolutely. Okay, I want to understand from you, and you've spoken about it, but in more detail, as much as is possible at this stage for you to share with us, that in terms of order of priority, what is the concrete deployment plan for this almost 39,600 crore? What segments will this go into? What geographies, digital technology? Take us through the breakup of your plans.
See, we have sufficient opportunity within the business line what we are in. I believe in commercial vehicle, passenger vehicle, if you look at the growth opportunity is much higher than what it is now. What we have seen in the last 3 years post-COVID growth is very nominal growth. And many of the people have postponed buying new vehicle or even upgrading their vehicle because the costs of vehicle went up steeply as India introduced Bharat Stage 6. And since there is a steep increase in prices, people have postponed, and that will really give a long-term opportunity for us to keep growing in the lending to the vehicles, including upgrading of a vehicle for a second-hand vehicle customers, and even in the rural area. And third is the second is the passenger vehicle. I believe is going to have a big change. Many of the vehicles tomorrow is going to be with different technology, and that needs a higher ticket price, and we believe that financing opportunity there will be much higher. That's second. And the India is building infrastructure, and the India needs a lot of investment into the machinery or equipment that's required to build infrastructure. And we have reasonably strong presence in this market, and I believe that is likely to grow exponentially going forward. And the rural India in last 2 years have started spending or growing faster. When I say spending, their consumption have gone up, their credit requirements have gone up, and it is showing a sign of matching the consumption of urban India. That means we believe the growth in rural India will remain consistent and long term. The e-commerce activity in India is spreading beyond the metro and the capital cities. Even in the smaller towns, you are seeing e-commerce activity. Therefore, a larger transportation requirement for last mile reach. That's where we are specialized in, and I believe that is another opportunity. And if you look at the SME business, the 2021 report of World Bank and RBI suggests that there is around 40 lakh crore credit gap for the SME. That means they are all underbanked, and there is a huge opportunity for NBFC to grow their presence in the SME business. So overall, it gives an opportunity for us to grow for nearly much higher than what we have been giving guidelines. Our guidelines used to be around 15%, and now we are upping that guidelines from 15 to 20% because capital is secured. Once the growth capital is secured, then planning for a growth becomes much easier.
Absolutely. Money in the pocket gives you a certain kind of confidence, and this very important point that you made up about the gap between so-called Bharat and India narrowing is a very important point in terms of understanding the dynamics. I want to ask you, in terms of ratings and liability profile, what specific ratings outcomes and cost of capital reduction are you targeting over the next, let's say, 24 to 36 months, Mr. Revankar?
See, our estimation is that once the balance sheet becomes strong, then automatically the lenders see us more positively, and the interest rates will start coming down. Incrementally, we'll be able to reprice our liability much better. And with this, I feel there is a bigger possibility of rating upgrade. And rating upgrade gives us a much bigger sources for the raising any liability tomorrow. So once you have highest rating, then your ability to reach multi sources which typically reserve their lending to only the highest rating company. That also is available to us. So that should give us over the period from 40 basis point advantage incrementally now to reach around 100 basis point advantage over the 24 months. So our book, liability book, which is at around 8.8% as a cost, it should be improved by 100 basis point in 24 months.
Okay, that's an important point that you make there. On a broader note, interest rates in India have softened by almost 125 basis points so far, and perhaps some more around the corner. How are you passing this on to customers, and what's your outlook as far as the lending rates are concerned?
See, there is already benefit accruing to us incrementally in the last 1 year, I can say. But of course, it takes its own time. There's a lag in transmission into this. And also, the repo rate reduction doesn't have direct impact to us because we have only 15% of our borrowing in floating, 85% in fixed. So that means only when we mature a particular borrowing that will get repriced. So it is going to be a little slow, but we believe in passing on the benefit to the customer as and when the benefit accrues to us. We would prefer to keep our net interest margin say in a bandwidth and pass on the benefit to the customer, because customer upgrading to buy a newer vehicle or new vehicle depends upon at what cost he can borrow money. So we would like to facilitate that and make his life comfortable and upgrade himself to buy a better vehicle.
Management has already indicated that there are no current plans for a bank license, but since you are with us here, I want you to sort of state it for the record and articulate it. What is the position on remaining a NBFC versus eventually becoming a bank? And as far as your Japanese partner is concerned, are there any formal or informal discussions that have happened on this issue of a strategic direction?
We did not discuss a single point on becoming a bank as far as the MUFG is concerned, because they were very happy with our infrastructure, our structure as a NBFC for delivering the credit. They felt that we are having the best possible way of direct approach with the customer, and our business which we have built with the direct reach with the customer is much superior, and they're quite happy with that, and there's absolutely no discussion on becoming a bank as far as the MUFG is concerned. But Shriram's own philosophy and thought process, if you go back and see, we always maintain that what is good for the customer is good for us. If as a NBFC, if you are able to give a better service to the customer, we would remain NBFC, because moment you become a bank, then the gap between customer and the bank may not be as same as what it is now. Our ability to innovate, customize, and service customer may not be as comfortable as we are now. So we felt that we should remain as NBFC, and that gives a much better service to the customer. And not only that, as a NBFC, we have been built our business model. It's a very simple business, raising resources and lending. Bank is a multiple activity place where you have to give so many other facilities to customer, having a savings account, overdraft facilities, credit lines, maybe other services, which we do not have that kind of expertise. And since we do not have that kind of knowledge and expertise, we can't really talk about what we will become tomorrow or why we should become a bank, which is little unknown, or where we don't have that kind of experience and expertise. So we are comfortable with being a NBFC, and the partner also think the same way.
Okay, that's a good point. I just have a couple of quick questions for you. One, in terms of just getting clarity on this, as we understand, MUFG will pay a one-time $200 million as what is termed as a non-compete, non-solicit fee to the Shriram Ownership Trust. What is the rationale behind this promoter level payment, and are there any covenants and restrictions that are added to this?
See, it is a $200 million. Basically, we should not be starting similar business by the promoter. That is the idea. We have established business, and after a partner coming, we should not be starting a similar business competing with this. That is the basic idea behind it. It is a one-time payment and nothing beyond that.
Okay, one-time payment. Finally, I just want to again end this conversation with a broader comment. You have touched upon it in your previous answers, but to recap, in terms of the economic cycle that we are seeing currently, as far as the economy is concerned, we've seen government's moves that includes on, for example, on the taxation front, both direct and indirect tax. We have seen what the RBI is doing. There are other reforms moves that are underway. Broadly speaking, what's your outlook for the next couple of quarters as far as the overall trajectory of the Indian economy is concerned?
See, I look at very positive. Post GST reform, there has been substantial increase in the sales, especially on the vehicle side, and I believe on many other consumable items. So that is a very strong point, and I think that will continue to remain, because this time around the demand is not just coming from the urban market, even from the rural market. So rural being a much larger population, and that being very active, the consumption going up in this market is a very positive for us. I think I'm quite confident and very bullish on the growth for the next couple of quarters. Of course, India, we do have some dependency on the rains. So I think we'll again look for good rains in the month of July. But till then, I believe the demand is going to be quite strong, and we should be able to grow at current level of around 16% growth we have been having in the last 2 quarters. Same trend should continue for next 2 quarters.
Okay, and very finally, what will you be competing on in the future? Because competition is intensifying both from banks and fintech NBFCs. Will it be pricing, your reach, your ability to assess and appropriate risk? What will your strongest point be as far as your competitive strategy is concerned?
Our strongest point is always reach and customer connect. That will continue to be an advantage for us. We never compete on pricing. We never compete on LTV or on margin money. We always believe our direct connect with customer is an advantage, and we'll continue to do that. But with now our cost of fund coming down because of the new investment, that will give us more option to retain some of our customers who are going for a better opportunity, especially lower cost of funds, whenever they get into bigger business. Imagine a customer who has around 4 to 5 vehicles with us. Tomorrow he wants to build a fleet of his own. Then possibility is that he would like to look for a lower cost of funds and go into the banks, which I will be able to offer him a competitive pricing and retain him. I don't want a customer who is with us for 15-20 years to move on to other competitors or the banks, and I will be able to offer him a much better customized product. Of course, we may not be able to match the pricing of a bank any point of time, but I can give much better service and much better offering and customize so that he will remain with us.
Absolutely. Viewers, that was Umesh Revankar laying out the rationale and the future with two champions coming together, Japan's Mitsubishi UFJ Financial and Shriram Finance, a household name in India, coming together for what promises to be a very, very strong partnership with India's market and reach, with Japanese capital and the Japanese way of doing business also coming into play. Umesh Revankar, thank you very much for your time with us today and all the very best for this deal. We will keep tracking this and coming back to you as the situation develops. With that, it's a wrap on this conversation. We'll come back with more. Until then, goodbye.